Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a proxy statement, which might sound boring, but stick around because inside these documents are hints about what a company really thinks is important and sometimes what they're worried about. We're looking at Vor Biopharma, a company working on cell therapies, and we'll see what their annual meeting has in store. This is a Schedule 14A, which is basically a proxy statement filed with the Securities and Exchange Commission. Think of it as the company giving you the details before their annual meeting, like an agenda and background info so you can vote on important decisions. So Vor Biopharma is having their annual meeting in May of next year. This meeting is important because stockholders get to vote on key things. For next year, they'll be voting on electing directors, increasing the number of company shares, and ratifying their accounting firm plus any other business that comes up. First up, we've got the election of directors. They have a board, and it's divided into 3 classes. This year, 2 directors from Class I are up for re-election, Matthew Patterson and Daniela Beckman. If elected, they'll serve for 3 years. It's basically a vote to decide who gets to help steer the company. Next, they're asking stockholders to approve increasing the number of authorized shares of common stock. Right now, they can issue 400 million shares, and they want to bump that up to 800 million. It's like doubling their potential funding pool, which can be a big deal for a growing company. Finally, there's the ratification of their independent accounting firm, Ernst & Young. It's pretty standard, but it's about making sure the company's financial reporting has an outside check. Instead of sending a paper copy of the report, they are using something called Notice and Access to deliver the materials online. Let's meet the nominees for director. Matthew Patterson has been on the board for a few years, even serving as chairman. He has experience in biotech, which is key for a company like Vor Bio. Daniela Beckman is the other nominee. She's a chief financial officer at another company. That financial expertise can be really valuable on a board. The board is recommending that stockholders vote for these directors to continue serving. There are also other directors who will continue to serve, like David Lubner. He has a financial background, including having been a chief financial officer and experience with biotech companies. Fuad Namouni is another director, bringing expertise in oncology and drug development. Of course, there's Robert Ang, who is the company's CEO. Having the CEO on the board makes sense since they know the company inside and out. Ares Kalia recently joined the board and has a background in biology, finance, and law. The proxy statement also touches on corporate governance, which is how the company is run and overseen. They talk about board diversity and director independence. They are trying to get a diverse set of experiences and backgrounds on the board. The majority of the board are independent, meaning they aren't employees of the company, which helps ensure they're acting in the best interest of the stockholders. The board plays a role in risk oversight. The audit committee looks over major financial risk exposures, for example. Now, about that proposal to increase the authorized shares of stock. They want to go from 400 million to 800 million. Why? Because they need flexibility for future financing, potential acquisitions, and employee stock options. They are saying that issuing shares is fundamental to their growth, especially for clinical trials. If stockholders don't approve this, it could limit their ability to raise money and move forward with their plans. Increasing the number of shares could also have an anti-takeover effect, which means it could make it harder for someone to take control of the company. It could allow them to issue more shares to friendly parties, diluting the voting power of others. The final vote is to ratify the selection of Ernst & Young as their accounting firm. The audit committee picked them, and now they are asking stockholders to agree. Here's a quick look at what they paid their accountants. For the most recent year, audit fees totaled $675,000, which is just for the audit of their financial statements. Let's meet the executive officers. We already mentioned Robert Ang, the CEO. There's also Tirtha Chakraborty, the Chief Scientific Officer, Han Choi, the CFO, and Eyal Attar, the Chief Medical Officer. These are the people running the day-to-day operations. Who owns the company? Well, RA Capital Healthcare Fund owns about 32% of the stock, followed by Reprogrammed Interchange with 31%. Then FMR and 5AM Ventures each owned around 5%. These are the big players, the ones with the most say. Now, let's talk about executive compensation. This is always an interesting one. Here are the compensation details for the top folks. Robert Ang, the CEO, had total compensation of over $22 million for the year. That includes salary, stock awards, and bonus. In the previous year, his compensation was over $2.6 million. Ayala Tar, the chief medical officer, made over Etar, the chief medical officer, made over $1 million compared to about $1.3 million the previous year. Atirtha Chakraborty, the chief scientific officer, made about $1 million compared to about $1.3 million. Previous year, Tirtha Chakraborty, the chief scientific officer, made about $1 million compared to about $1.4 million. The previous year, had Tirtha officer made over $1 million the previous year. Sivtafik officer made about $1 million compared to about $1.3 million the previous year. This section lists all the stock options and awards that have been given to the top executives that haven't been exercised. It's how they're incentivized to improve company performance. What about the board? Here's how much the S-Band non-employee SPAN directors made in the most recent year. Matthew Patterson, as chairperson, made about $116,000. Other directors made around $80,000 dotty TAUs and dot options for their service. The filing mentions related party transactions. This is where the company deals with people who are connected to the company, like directors or major stockholders. They say that RA Capital, which is connected to a director, bought shares of stock recently. Also, there are 2 directors who are connected to major stockholders. So what's the story here? Vor Biopharma is focusing on getting their corporate house in order, making sure they have the resources and oversight to keep moving forward. What I notice here is that they're clearly setting themselves up for future funding. The request to double the number of authorized shares is a big move. It suggests they anticipate needing more capital, which isn't uncommon for a biotech company in the clinical stage, but still important to watch. One possible risk is related to potential anti-takeover. They have the ability to dilute the shares in case they don't want a specific entity taking control. My conclusion is Vor Biopharma is at a critical juncture. They need more money to advance their therapies, and these votes will help enable that. Thanks for watching. If you found this breakdown helpful, please like, subscribe, and comment below. What other filings should we decode? Let me know.